Welcome to Capitalizing Your Life, the podcast that shows you how to take control of your money, build lasting wealth, and create financial freedom using the infinite banking concept. If you're ready to make your cash flow work for you instead of someone else, you're in the right place. Here's your host, Glenn Yaney.
Welcome to the Capitalizing Your Life podcast. Today, my guest is Jared Adams with Flight Path Financial and also the co-host to Creating Tailwinds podcast. Welcome, Jared.
Hey, Glenn. Thanks a lot. Thanks for having me.
Yeah, I'm excited to have you on. We met through our Infinite Banking Practitioners Mastermind group, and we really, had a good conversation. I figured you'd be great to have on the podcast.
Yeah, I really appreciate that. Awesome to meet someone with, similar goals, similar mindset. I'm always willing to meet people in the infinite banking community. That folks really think alike in terms of how that works. But great to have met you, and thanks for having me on.
Yeah. So if you could just go into your story a little bit.
Oh, cool. Where do we start? It was a cold and rainy night on an August afternoon. Oh no, wait, that doesn't count. That doesn't count. No, I grew up south of Buffalo, New York, so I got a little Yankee in me. I grew up there for 20 years, and flying became a passion for me real early on in life. I met a guy who was a U.S. Airways pilot who I was just mowing his lawn, cleaning his garage, painting his house, doing all the stuff he didn't want me to do, or he didn't want to do his own by himself. And one week he said, "Hey, I'm going to pay you with a plane ride this week instead of a check." I go, "Okay, cool." And we went up to the little local grass strip and hopped in his Aranca Champ and took, his little tail dragger with a cloth skin, took it to flight, and I was hooked, man. That was it. Hook, line, and sinker on aviation for me. I didn't have a whole lot of aviation in my background. My dad didn't fly. My grandpa did a little bit of private stuff, but nobody was an airline pilot in my background, right? And that was kind of where aviation started for me. It was just, how do I do this more? And so, what do you do with this more? Well, you got to go get certified. Well, then once you get certified, you become an instructor. And then when you become an instructor, you go work at the regionals, right? So it just kind of naturally was a progression on ending up at a major airline, like almost 16 years after I started flying. So that's kind of the career background. But that took me to the Atlanta, Georgia area in terms of where I live and where I call home. I've got a wife and 3 kids. They're right in those fun ages where they're post-toddler but preteen. So we have a lot of fun with them. We get to do a lot of fun things. But that also makes it so, we're thinking long term. We're thinking legacy. How do we make sure that whatever income we're making, whether it's a W-2 or a 1099, how do we make sure that comes into our environment, keep it in our environment, keep control of it? And then years and years down the road, how do I make sure I pass that on to my kids and that they can pass it on to their kids? So that was what really brought me into wanting to learn about, when I first read the book, R. Nelson Nash's Becoming Your Own Banker, I didn't get it. I didn't catch it at first. It took me, it took somebody to come back to me, maybe 10 years later and say, "Hey, I know you said you read that book, but did you ever do it?" And I said, "No, I couldn't make it make sense. I didn't catch it." But when they said that, I had to go prove to myself that I needed to go back and read it again and make sure that I had made the right choice, maybe 10 years ago. And that second time reading it through and really trying to understand what was going on, I caught it. It was hook, line, and sinker on IBC.
Yeah. So let's talk about through that. I was just thinking about that this morning for myself. There's that learning window everybody goes through. It's not like a lot of people have to, we hear a lot of information on life insurance, so we always are a little bit hesitant about it. And really, there has to be some pivotal moments, I believe, in your financial life to come to the conclusion that this might be a better option. What do you think those turning points were?
Yeah, that's a really good question. I think that the idea that whole life and term are the same product, that they offer the same benefit, yet that they offer the same benefit in terms of a death benefit, the structure is so wildly different, yet they get put in and lumped into the same kind of idea, right? And so if you lump those into the same product category, they don't make sense when you compare them. When you're looking at this going, well, I could pay this much in term or this much in whole. Well, whole is way too expensive. Well, it takes someone willing to rethink how they're looking at that to understand what the product offers. But that's talking about it as a product, right? IBC is a process. Infinite banking concepts is a process. It's not a product. And, so through that, if you can't differentiate both the product and the process, and if you can't grasp what whole life is in itself, just plain vanilla whole life, none of this IUL, VUL stuff, none of all that. Kick that to the curb. Just plain vanilla whole life. If you dive in and can understand that, then you can really make sense of what's being offered. But I think there's a barrier in terms of just the education piece of that. And I feel like we talk about that a lot, just differentiating between those two products first before talking about the process.
So let's talk about that. I might even create a podcast on this, but like when you think about like the reason why people like term is because the premium amount is way less.
Yep.
But you also have to think to yourself, the reason why term is so much cheaper is because it doesn't pay out. There's a high probability that it's not going to pay out any death benefit. And really, with whole life, it's guaranteed.
Sure.
So these are guarantees that are going to happen.
Yep.
And it's going to pay out. So that's why the actual product itself would be more because it's guaranteed to happen. But with IBC, like let's go into a little bit more into that just because there is definitely more benefit than a typical whole life policy.
I guess the way you could also structure that idea of how that works is if you buy a term product that's a 30-year term,
Yeah.
like you're clearly looking way out ahead, a 30-year term, maybe in your early 30s, early 40s, and you buy a 30-year term product, you're covering your death benefit or your life for a finite period. One day after that contract is over, if you were to pass away, you get nothing. Okay, cool. We understand that. That's why it's cheaper. But maybe what would it look like if you structured a 65-year term product? Like the idea that you're going to eventually pass away someday and that whole life product is guaranteed to pay. Well, how many years do you want to pay on that product? Do you want to pay until you're 65, 75, 95? All options that you could pick. But if you viewed it from the idea that you're not buying a 30-year term, you're buying a 65-year term. Well, that makes sense why you're paying more for that whole life product is that you're covering a much longer period of time. And so that's just the death benefit of it, though. That has nothing to do with the cash value that can be generated from it and how that's associated with a whole life product that's not associated with a term product. So there's it's kind of an apples to an oranges scenario, right? They're not
definitely.
even in the same bucket. Yet, if you talk to, some financial whiz out there that would want to say, buy term, invest the difference or otherwise, well, okay, cool. Let's compare apples to apples, because if that was actually the case, again, I don't want to get you bogged down into some Excel spreadsheet, but I could show you how in the Excel spreadsheet, you may pay less out of pocket for a term product. But over the course of 30, 40, 50 years, you lost by having the term product. You paid much, much less in terms of what you have access to, what you may have invested over the course of that time. I'll even give you a 10% return over, an average 10% as the S&P would do. Okay, cool. Keep that in the buy the term, invest the difference style. You're still going to make out more by a slow, steady, guaranteed growth within a vanilla whole life product.
What would you say was the main turning point of deciding to move forward with buying your whole life policy?
The biggest thing for me was the idea of thinking generational.
Yeah.
It wasn't just comparing the cost of insurance. I didn't at the time understand how fortunate I would be year over year to pay premiums.
Yeah.
When you hear someone say that, from the outside looking in that hasn't started that, they go, "What are you talking about? You're fortunate to pay premiums? I can't wait until that annual premium comes due
Yep.
because I know I'm starting the next year and I'm going to increase the value of my policy." And so when I viewed that mindset change of not only what I was going to pass on from a long-term legacy product, but how I was locking in a year-over-year benefit that was guaranteed, that was probably the big switch in mindset for me, was just understanding what was being created.
Yeah. So the main thing for me was with, okay, so, and I don't need to compare it as much, but my old way of thinking was to put all I can into a 401k, some retirement fund. And the problem behind that, and it's not to compare the two because it's not at all the same,
Sure.
but I was exactly thinking that way when I first started.
Yep.
The 401k, once you put your money in, it's locked up. So you put in this, say if it was at the time $18,000 a year, I'm not able to get to $18,000 a year, and I'm just, setting and forgetting it. With the whole life policy or the infinite banking concept, I was able to put a sizable amount of premium and really have access to it right away.
Yep.
So no longer is it becoming so much as we're looking at like a 5 to 10% return. We're looking at the volume of money that I can put into this because I'm able to access it almost immediately.
Yep.
So because of that, I can still operate my life the way I was, and then I'm more motivated to put as much as I can into it.
That's right.
So that's my favorite part about the infinite banking because it creates some discipline in my life. I like to set up systems.
Yep.
Once the system's in, I know I have to put this much premium in every year.
Yep.
And then from there, as life happens, I'm able to withdraw or not withdraw, but borrow against my policy to, finance life, which also has some major benefits.
For sure. Yeah, totally agree with that. And for us personally, we were pretty disciplined in what went into savings to create like an emergency fund.
Yeah.
And that ended up for us, just for our personal setup with the family, we converted those emergency funds into that initial SPUA payment. So when we're doing that initial large lump sum startup, when they said, we'll give you access to about 85% of what you're putting in day one, as soon as that check clears 2 weeks later, you could have access to 85% of what you've started with. And then to see what that grows into over, the course of 5, 10, 15 years. I mean, it was a no-brainer at that point once I was able to see exactly what you were talking about, the access to the capital right off the start. So I still had access to 85% of our emergency fund right then.
And also to piggyback off that idea is that a lot of people are worried like, oh, well, you have the initial, it's not a loss because you are getting something for it, but you are going to have 15% or 20% of your capital unavailable.
Yep.
But what we're doing is we're building out a system of a financial system, family banking financial system that will be able to finance the needs of life going forward.
Yep.
And to build a business, it's unprofitable for the first year to 3 years. And that's very similar to what we're doing.
And, Nelson talks about it in the book, but he would also say you're, part of that cost, part of the funds that you quote unquote have lost your environment or that you're losing access to are going towards the home office folks that are paying to have lawyers accessible to you, to write that check when you want it, to answer the phone when you have a question or have a tax question or something along those lines. Like you have created that team that they already have. You don't have to go start up your own CPA firm. You don't have to find a tax guy. You don't have to find all these, various one-off scenarios for your small business. They have that already. So that often gets overlooked when you're looking at which company you might start up with and who you're going to use and what that looks like.
Just to so with that, when we buy a mobile home park, I mean, there's some cash flow that starts coming in, but really there's no money for the first year or so, just because we're taking everything we generally pre-fund the renovation. So we take, we know we're going to spend $100,000 to $200,000 on this mobile home park. So if we were to cash flow it, which is what we're talking about, we put our premium down, but we're expecting everything to come back to us. It doesn't work that way. You have to actually capitalize the system. And that's really why I called it the Capitalizing Your Life podcast, because if you look at the longer I'm willing to plan, the better my life will get. So if I think about creating a business and I buying my first mobile home park, it wasn't about the income that I was going to make from the first mobile home park. It's about the one that I was going to make buying the 10th mobile home park.
Right.
And that all takes time. And I wasn't planning on taking any income from the first mobile home park. I was planning on reinvesting all of it.
Yep.
So at that same pace in the 10th mobile home park, then it turns into where there's able to really receive the benefits of owning that many properties.
Sure. And you don't stumble on that, right? That doesn't happen with a 1 year good luck. That took you a lot of planning, a lot of forethought, a lot of ideas of what could happen, good, bad, and otherwise in between those years. So, kudos on the ability to do that.
Hey guys, if you'd like to learn more about the infinite banking concept and how to flow your capital through your own financing system, my team and I are here to help. With over 35 years of experience, we can guide you in building a properly structured whole life policy tailored to you and your family. See the scheduling link below. Now, back to the show. So let's talk about one thing I've been thinking a lot. I've been rereading Nelson Nash's Warehouse to Wealth, but really the unseen, the benefits of the policies that you can't measure in numbers.
Sure.
What's like one of those things that you would say that you weren't expecting when you started, but it was just like a unintended side effect?
Oh, that's a good question. If I had to put that into maybe one or two, probably the top one that comes to mind is the disability benefit or
Yeah.
the waiver premium.
Oh, yeah.
If that is now that comes at a fee, that's not required that you add that. But if you were to add that and then become disabled or unable to work, you will get part of the benefit is that the insurance company picks up your base premium. Any PUAs that you were expected to pay, they're not covering that, but they're going to cover your base and do so while you're disabled. Given that these are whole life products, you know, that the chances of that happening are not high, but that's a coverage or a benefit that doesn't always get discussed or talked about. And I think that's a huge benefit. Some of the other ones that come to mind are it's not long-term care, but it's what's the name of the stuff? What's the name of the benefit that they add?
Critical illness?
Yeah, but they usually lump all three of those together into one, and I can't think of it. That's not coming to mind right now. That's what it is. The other benefit that comes to mind is the accelerated disability benefit.
Terminal illness.
I don't even know if I'm calling that right. Yeah, the accelerated death benefit. So, but that's, different companies look at that different ways, right? So it's not all the same through all the companies, but you've got typically your critical illness or, some type of a setup where you may be a terminal setup or, maybe a specified. Again, that's just with the one that I write with often, but there's a lot of different ways that those companies look at that. But, you end up through that benefit getting access to a portion of your death benefit tax-free while you're alive. So if you're in a setup where, you need to go into a care facility or something along those lines, you've got access to funds that you've contributed to over the course of your lifetime. And you don't have to think about where that's going to come from or whether or not you have that benefit available. So I guess those are probably two that come to mind that are, more riders or more setups within the policy structure. Yet the one that gets so overlooked and just underappreciated, in my opinion, is what you have access to in cash value.
Yes.
That's the reason why you're setting up an infinite banking concept style policy, is that your goal is to build some cash value that is basically your net present value of a future death benefit. Like that's the whole goal of setting that up. So that in itself, that they allow you to leverage your future death benefit payment and they allow you to borrow from that right now. I mean, that's the bread and butter.
Yeah, I would say that I also had the same experience with finding out like the long-term care riders and all the stuff that was in my policy. The one thing I would say is that the more I read into it, the more my incentives are aligned with the insurance companies as well. Like the insurance company wants you to live as long as possible.
Yep.
They want you to live all the way to 121 so that they have access to the capital that you're putting in as well. The premiums that you're paying, they're able to make a spread on the money.
Yep.
But then also that they are, because of the liquidity that you have available, it creates it to where you're able to pay the premium for longer. If something were to happen, you're able to be able to cover the premiums, but then also be able to take advantage of those funds. Because I used to think before I knew anything about IBC, I would think like two things: the loans that you're paying interest on, like wouldn't the insurance company not want to give you that money? But they actually have to have a reserve for those funds.
Yep.
And when you go to borrow it, it's like you're using capital to, for one, pay the insurance company, but you're able to utilize it to go take advantages of it yourself. So, and when you're pretty much shopping in your own store, and you're also benefiting from some of the interest being paid from that money that's sitting idle at an insurance company that might be held in some type of bonds or something liquid to them. But at the same time, you're able to take advantage of these funds that are available, and if not, you're able to, in the whole meantime, you're able to receive interest as you're growing your capital uninterrupted.
Sure. Yeah, I guess two thoughts come to mind there. One is
Yeah.
you're doing so in a non-inflationary style environment.
Yeah.
Those funds, if not deployed by you, they have one earmark. That insurance company can use it for investment. They can use it to pay capital costs, or they can allow you to borrow it. Once it goes out of their environment, that's it. They can't create another dollar like
Yep.
your fractional reserve style banking can. So you're doing so in a system that is very beneficial to the value of your dollar. Now, you're just one tiny little cog in the millions and millions of folks that are out there, right? You can't
Yeah.
undo that system overnight. But You're right. You are, doing so in a non-inflationary environment.
Yeah, with keeping the incentives aligned with the insurance company, they're giving you the long-term care rider. This also would benefit you living longer, the critical illness, the disability. It's like when you don't have those funds available, I believe you would deteriorate a lot faster if you're not getting the proper care that you need.
If you need to rely on the government for your care, we all
Exactly.
know that's not going to be as great of a quality as if you're able to determine and have say in where those funds go and the care that you receive. That's a pretty basic one. I don't think that's too controversial, right?
Yeah, definitely. And who wants to do
Yep. Yep.
that? So, what would you say is next in Jared's world? Like, so now that you have your policy, you decided that you want to start educating people on infinite banking. What made you take that next step?
Yeah, awesome question. For me, it was one that I I realized how long it took for me to figure out infinite banking. Not to figure it out, but to just catch it. But once I caught it, I couldn't imagine not sharing it with somebody else. I've been very fortunate to, have a great mentor that was willing to teach me the things that I didn't understand and still teach me the things I don't understand. This is, a constant learning process, as you well know.
Yeah.
So having a great mentor has been an absolute asset. But then, also having the ability to just chat with people that I wouldn't normally chat with in terms of opening up a discussion that they lead. When we get together like this, I know I talk a lot, but if I'm talking with someone that's got a lot of infinite banking style questions, I try to just ask questions and shut up. And that's really hard for me because I want to tell them how important it was to me and how much of a game changer it was for our family and for our financial setup. But I have to keep that in check when we're having those conversations, just to make sure that I'm learning about them so that I can just help kind of steer the conversation towards, hey, have you thought about this? Or hey, have you thought about that? Because I don't have all the answers, but I do have, a different mindset or a different outlook on how you can find the right answers.
Yeah, I think the hardest part about talking about finances is not taking it personally. And for me, I know that whenever I first started, I would get real defensive. Like if somebody were to tell me that this is better or it's like somebody trying to tell you that your thinking's wrong. And it like was a switch for me. Whenever I started coming around, I'm like, okay, I kind of understand this. And for me, it was a little bit of I was practicing velocity banking and doing stuff like that, which is a little bit complicated, I think. I
Sure.
think that's the complicated part about infinite banking.
Yep.
And it doesn't have to be, but at the same time, I was practicing infinite velocity banking. And then once I came around to the conclusion that you are your most valuable asset, your income needs to be protected, and those are all things that IBC covers, including the reserve funds,
Yep.
to be able to take advantage of certain situations where you can actually create more cash flow in your future.
That's right. Yeah, I was very fortunate in the sense that once I got up and running and got started, there was either a good close friend that I knew needed to hear this. I knew his debt was spinning out of control. He was making a lot of money, but he was still living paycheck to paycheck. And so I made sure he got the book, but then he just didn't want to read it. And it was like, again, I can't force somebody to change how they think or change what they look at. But 6 months later, he came back and said, "Hey, I finally took the time to read this book, and I can't wait to get started. Where do we start?"
Yep.
And so, but that then started a 1 to 2 month long education process, right? Because he didn't know what he had read or what was at disposal to him. Once we got him up and running, he's now, almost a year into his policy. And he's just like, I can't believe I didn't start this sooner. And this was just a young, I say young, early 30s, early 30s guy making good money, has a young family, and the path that he's put his family on is a trajectory that no one can stop. And he's unlocked the power of uninterrupted compound growth for the rest of his life. And so again, I can't take the credit for that. That's him. He was the one that made the decision to do that for his family. But I get really encouraged by folks like that when you can see it from the outside looking in, but I can't be the guy that calls that out. I'm not that guy. But I can put the book in front of you and I can offer a conversation. After that, each person individually has to decide where they want to go.
Yeah, Nelson has so many good one-liners. The one that come to mind is caught not taught, So it's like one of those things where it's like once you understand it, it becomes where I see it all the time. Like I'm like, this would be the solution to what they're dealing with.
Yep.
But who wants to hear about life insurance when they're dealing with financial strain on their life?
It's
You
so
know?
true. It's so true. I mean, we just finished the Thanksgiving holiday, right? How many
Yeah.
dinners I was around over the last of the week and a half. Oh man, I had to shut my mouth because you see it,
Yep.
you see the opportunity on, well, if you just structured it like this, or if you just changed your mindset a little bit to think of it like this, you have created the answer to the problem you don't even know. So I guess that's one of his other one-liners is in order to see the solution, you've got to know the problem.
Exactly.
And if you don't know the problem, you don't know the solution.
Yeah, as you go, it's like you go deeper and deeper, and I could tell you for me personally, I was, like, on vacation for 5 or 6 days straight from this, Thanksgiving holiday, and you start to lose motivation to do things. You're eating terrible food, and you're trying not to eat bad the whole time, and you're eating bad the whole time,
That's right.
and then, you go into the finances where you're just like it just feels like there's just so much going on, and,
Yep.
it's like but these podcasts, the main reason why I created a podcast is to be educational, hopefully help somebody else,
Yep.
and really, I think if one person gets anything out of it, I think that's a win for me, so
Completely agree. That's why we
it
do it on
changes
our
your
end as
life.
well, right? You get the opportunity to get to know the person you may talk with
Yeah,
for multiple hours. If you're going to embark on the IBC journey, you're likely going to go through some sort of education process. This is not a mainstream, well-known type of an idea. And so by doing that, you're going to need to get to know your practitioner pretty well. And through that, you know, I always encourage that process, but through that in itself is a hurdle that you've got to overcome. There's going to be an education that takes place just to understand what you're building. Because once you get this up and running, I don't want to be the guy where every single time you have a question, you come to me and now we're talking 6 to 7 times a week just because of what you've built. I want you to understand what you've built so that you're off and running. And then, let's check back a couple of times a year when you've got a great idea and you're like, yeah, I was thinking about structuring it this way so that I can use some of the cash value. And hey, what do you think about that? Those are the conversations I love to be a part of. But I want you to know the framework of what you've set when I get you off and running.
awesome, and really, it's the one thing I can say that I've always wanted to be somewhat of like I guess, a money coach or something like that, but I was like, I don't know if somebody's gonna change your life by putting their money into an index fund or anything like that, and yeah, you can retire and all those things. It's like, but we're really what are we trying to get to? It's like having a fulfilling life and really being capitalized and taking advantage of those times, whether it's a reserve large enough to where you can leave your job and start a business, or if it's a property that you're looking at purchasing that you're able to buy it on your own or buy it with another partner. It turns into where you're able to start taking actions on things that you really want to do compared to wondering when you'll be able to take that opportunity. And I really believe that with IBC.
That's so well said. I mean, that kind of spins back to what you started off saying about funds going into a 401k or whatnot.
Yeah.
When that is the setup, you're just looking at a future date, hoping that you have enough when you get there, as opposed to being able to leverage that capital now.
Yeah.
And I heard someone say early on that those with capital, the opportunities will find you. And I was always like, nah, okay. I didn't really believe that or sign up to it. It's so true. If the capital is there and you have it available, you have to be smart with how you deploy it and where it goes. But that's the opportunities will find you.
Awesome. So where can people find you?
I appreciate that, man. So we've got our website, which is flightpathfinancial.com. And then, there's a contact us link there if folks wanted to reach out. And then we've also got the podcast, which is Creating Tailwinds, where myself and John Erbrick are the hosts of that podcast. And that's just an awesome opportunity where we get to discuss anything IBC related, whether it be a deep dive on some of the riders and the policies or just conceptual how it works. Sometimes we get a little off the rails on the finances topic from wherever that goes, but it's always a fun conversation.
Yeah, definitely. And I think for anybody interested in listening, I definitely listen to your podcast. Whenever they come out, and the more you listen, the more ideas you get, and really just continues the journey through learning about infinite banking concept, which is great.
Yeah, I appreciate you saying that. I mean, at the end of the day, I'm humbled by the community that is out there and how awesome of a group the infinite banking community is, because it's the rising tides, rising all waters, right? We all want to see folks catch IBC. Can we think about what it would look like in a world where you're borrowing from your own policy for any of your finances, your needs for finances within your lifetime
Yeah.
are controlled by you and capitalized by you, as opposed to having to run off to the bank or run off to a 401k loan or beg for a small business loan. All of these different vehicles that are so widely available. If you think outside the box and look at what it might look like to be able to capitalize that yourself, what does that look like? And that's at the end of the day what that whole community is after is being able to try to get folks to understand what they have the power to build. And it's so simple. It's not a complex product. I know we talked about the process. It's really so simple. It just takes a little bit of being able to think outside the box and see things a different way.
Definitely. Well said. Thank you so much, Jared, for being on the show.
Thank you, Glenn. You're awesome, man. Really appreciate what you've done and how you're kind of revamping the podcast. I love to be a part of it and look forward to coming back and joining again.
All right. Thank you.
Thank you for listening to the Capitalizing Your Life podcast. Please rate, like, subscribe, leave a comment, and share with someone who you think would enjoy listening.